Kevin, you've been one of the most accurate forecasters out there on Hong Kong's GDP, being very bearish. In fact, I think you were the closest to the contraction figures that we got for the last quarter. What are you seeing in Hong Kong?
Well, first of all, the second quarter, that contraction was quite significant, especially in terms of exports. They were down by about 11% quarter on quarter, and that really reflects a synchronized global slowdown. And because Hong Kong is a very externally driven economy, so it is really telling us something that the world is not doing well.
Yeah, what exactly is it telling us? Is it telling us that we're in for a double dip? Is that what you're hinting at?
Not yet. I think the double dip for the G2 economies, our probability is about 40%.
40%?
Yes, but our base case, which is 60%, suggests that G2 will barely be able to avoid this double dip. So our growth forecast next year for G2 will be close to 0%.
Okay, but we are here in Hong Kong headed for recession, is that right?
Unfortunately, yes.
Okay. What about China? I mean, people are counting on China to be the growth engine. Are you saying it's not enough to help buoy Hong Kong?
Not really. I think if you look at the headline numbers, they're still doing well. But in fact, we think the growth in China is actually slowing more seriously than what the headline numbers suggest to us.
Like what?
Like the trade figures. Forget about the headline export or import growth close to 20% year on year in value terms, but in volume terms, imports, for example, have slowed to about 3 to 5%, just 3 to 5%. Exports is about 8% in volume terms. So that is really telling us that both domestic demand in China and also external demand from the rest of the world are slowing quite sharply.
Wow, that sounds like a very gloomy economic picture there, considering, isn't Hong Kong a financial capital? What are the implications then if Hong Kong does enter recession?
Well, I think this recession will last for about 4 quarters. I know this is an inevitable process. We had a lot of tremendous growth over the last 2 years, mainly because of the stimulus demand from China and Hong Kong, from China and U.S.
Right.
So inevitably we have to take that, and also because internally the inflation pressure has been rising so rapidly, so it's hurting consumer spending, it's hurting corporate spending altogether.
You know what happened here? Because I think just about a year ago we were talking about overheating in the Hong Kong economy. So in just about 3 quarters, we're in a contraction mode, heading towards recession?
Yes, yes.
How did that happen? That's what I'm asking.
Well, again, because the stimulus is not here anymore, and also because we are at the final stage of this inflation. So at the final stage, that means growth is being compromised by this inflation altogether.
Okay, one more question for you. I guess people who are living here in Hong Kong, they've been looking at the property market going up and up, talking about overheating in real estate. If we enter recession, does that mean property prices will come down dramatically?
I think that has already started. At least we have seen transactions to come down quite rapidly.
Right.
I guess going forward, the economy needs to see some correction in prices in order to restore the sanity. I think this inflation has been quite damaging to the economy, also to the market.
Okay, one more question for you. Does that mean that corporates will leave Hong Kong to go elsewhere?
No, certainly no.
Right.
I think Hong Kong is still a very attractive international financial center. But just that we need to see that correction for the next at least half a year.
That's interesting.